Lundins, Jonas Dorling, what does that name mean to you?
Mate, Lundins is a name synonymous with long-term thinking, with value creation in our industry, isn't it?
Absolute blockbuster names. Yeah, I think of our industry, like, we love it. The mining industry, it's got a remarkable ability to reward like long-term, patient, thoughtful capital, and it also tends to punish the careless and the careless kind of capital in our industry. When you're a visionary combined with that long-term capital thinking, you really do get rewarded. And I think the Lundins have a habit of being rewarded, but it's not coincidence. It's by design.
Yeah, I think you're spot on, mate. And there is a formula. It's simple on paper. It's incredibly hard to replicate. That's why not everyone has the success that their family has. You know, they go to places people don't want to go. They're very disciplined when it comes to capital. They have a tremendous amount of a can-do attitude. You know, no guts, no glory is famously the name of the biography of Adolf Lundin, the grandfather of the two gentlemen we're speaking with today. And the proof is in the pudding when you look at the companies that have been built.
Fruta del Norte comes to mind. It is amazing to see the value creation of that asset in Ecuador, and the emerging Vicuña district is certainly on our mind as we've been running the podcast. The Lundins, fingerprints are all over. What are some very these are phenomenal mining districts that are emerging in front of us that are gonna be fruitful for decades and decades, and the Lundins are instrumental in their development.
You're so right. I'm super excited to share this conversation. And just to put one little anecdote into the idea that nothing happens overnight, these guys started looking through their father in Argentina in the late 1980s. Now we're talking about the Vicuña being built out in the next few years, in the next few decades, for something that could produce over the next 100 years. And we quiz them a lot about the Vicuña, about all the companies in their stable of assets, and I'm very excited to share the conversation with Jack and Adam Lundin, mate.
I got a sense of both humility and absolute hunger for the challenge. Money miners, enjoy. JD, I have to pinch myself when I say who our guests are on the line right now. We've got Jack Lundin and Adam Lundin joining us. Gentlemen, thank you so much for speaking with us. Welcome to Money of Mine.
No, thank you guys. It's great to be here. Big fans of the show, and you guys have a good audience in Canada, so happy to be able to make this work.
We're stoked to hear that. It's not often. I mean, mining is such a niche part of the world, and rock stars in mining are still not rock stars, but it's not often that we actually interview someone who needs no introduction, and you guys actually need no introduction.
Don't know about that, but no, we appreciate it. It's going to be great to have a conversation with you guys, and we've been following the show for some time. And I think, was it a year or two ago, Jamie Beck was on?
Yeah, that's right. Yeah. So it's been really cool for us to see the last few years of evolution within the assets, within the stable of companies, and the broader family of assets and businesses involved. And it's been a dramatic rise up in the last year, but that's often the payback you get for many years of work. And you and the family, before you've been in Argentina since the late 80s, as I sort of understand it. So I'm really curious to start the conversation about the philosophy that you guys have that's been instilled within you guys, and you press on into the organization, about how you build value in mining organizations. And just want to hear you guys sort of riff on that.
Yeah, I think it obviously started with our grandpa getting into the business. You really want to get in natural resources, and it's a tough barrier to enter the space. So it's mainly on the exploration side. And then our dad and uncle really turning them into businesses. And now Jack and I and the broader group, we want to do, explore well, build well, and produce well. And it was really at the beginning, you kind of you didn't really have the ability to take a salary anyways. So it was, you were just a shareholder in the business, and it was all about creating shareholder and stakeholder value. And that just kind of trickled through today, where, ultra aligned with shareholders and have a lot of skin in the game. And, we're normally the first ones in and the last ones out, and don't really exit until there's an exit for the company, or that company gets in a position to start paying dividends, and we see returns that way. but it's very much like a big value for us is the ownership and the shares and being responsible with that.
One of the things we've sort of noticed with the real wealth creators in our industry is taking NPV studies, taking these long-term mine studies with a pinch of salt, acknowledging their sort of shortcomings in really representing value that comes in the second cycle, in the third cycle, in the fourth cycle, when you have a really enduring asset. Is that something kind of ever present in your thinking, or how does that kind of fit into the piece with you guys?
Yeah, I think it's like, it's always hard to time a cycle, and like mining is very tough, a small project or a big project, they all have their challenges. But if you can have like a long life deposit that gives you the ability to potentially catch multiple cycles, you have a better chance at success. And so, try and focus on quality projects with big life. And like that NPV IRR, it's like we're looking here at Lundin Gold performing extremely well. And I remember looking at the study when we were acquiring the project, and I think it was around 500 million NPV and $1 billion capex. And we got a lot of pushback when raising the money to acquire the asset, and it was extremely challenging to finance that build. But Dad used to call it a buried gold bar, more or less 10 million ounces at 10 grams a ton, once in a lifetime opportunity. And also it's like Ecuador's gold. And if they wanted a partner and get this thing built, you have that alignment. And so if we did it off, NPV and CapEx at that time, we would have agreed with the pushback we got trying to raise the money to acquire it.
I really want to come back to Lundin Gold, but before that, you hit on a couple of important points. One is that like alignment. The other one is long-term decision making, and the other one's skin in the game. And I think about like our industry, and we all love our industry. That's why we work in it. There's a lot we love about it. There's some parts of it that rub us the wrong way from time to time, but it's such an unfair advantage that the Lundin brand name, family, company has to effectively to finance and see into construction these phenomenal projects when it's clear the value proposition is thinking long term, is being there through thick and thin, is writing consecutive checks, because so much of the industry, instead of having skin in the game, doesn't have much skin in the game. Instead of thinking long term, makes short term decisions. Instead of having alignment, might have short term alignment. It's a tremendous moat that you have in an industry that doesn't really have moats.
I appreciate it. Yeah, I think we're just like spoiled with our upbringing and seeing it. Like our dad and grandpa, like they had so much fun doing it, and it was like infectious. We wanted to get into the business as well, and like that's like how they ran the businesses, and we want to continue to make it better and carry that legacy on.
Jack, how do you think about it from your kind of perspective? You came at it from the engineering kind of background with your education, and core part of Lundin Gold Fruta del Norte in that journey, being the superintendent there. But like moving the dial on projects and getting them right in tough jurisdictions is kind of part of the MO of the organisation. How does that sort of emerge on a day-to-day basis, trying to extract as much value as you can, especially in that kind of build phase of a project?
Yeah, well, I think first and foremost, like the proper amount of planning and de-risking that is required before you can come up with a sanction decision. I mean, I agree that sometimes looking at long-term economic models, NPVs, IRRs, that's only one part of the puzzle, but it also does keep the team honest and really does ensure that we are looking to implement the best cost controls, implement the best execution plan, and inevitably there will be a hurdle rate in order to sanction something. And so maybe we have a bigger risk appetite, or maybe we feel confident in sanctioning a project with a lower kind of economic return on the model before you've sanctioned a project. But ultimately it does need to hold up. I mean, we can't just say we're going to look at building something that is suboptimal economically. But it comes down to having an asset that is going to make money in all cycles. Like, we're in a cyclical business, and so we have to prepare ourselves that, when we build this mine, we're going to operate it with the controls in place to really manage the cost and the efficiencies and, the safety standards. So you have to really have the upfront planning. And in order to plan well, you have to have the right team. And so when it comes to building projects, building out depth in the owner team is critical. We also do have to rely on consultants and contractors and engineering firms, but they're only going to be able to deliver what the owner team is requiring of them. And so whenever a feasibility study doesn't hold up or an execution doesn't go well, you can't just point the finger at the EPCM firm or the contractor and say, they screwed up. It really is an integrated approach. And so I think what we've done well in the past is building out depth on the owner team, really trying to ensure that we are planning for all scenarios, going after deposits that really do make money in all cycles, and trying to be true to, reaching a hurdle rate, making that economic model look good. Even though when you look at Fruta del Norte, I mean, it's funny to think back that there were times the economic model didn't look very robust. And now, generating the cash flow that we are from that asset, of course, gold price has helped. But even at a $1,250 an ounce gold price, like, this is still a very, very good asset. And that's what we want to go after, is assets that it doesn't necessarily matter about the commodity price. It's going to make money no matter what. And it's going to be executed because we have the right team in place and the right execution plan.
You're looking ahead now, and there's a substantial, build ahead for Lundin mining. Josemaria, eventually Filo del Sol. There's going to be a lot of capex, a big build to embark on, a lot of hurdles to tick. But I'm sure you've looked at projects that have gone well when they've embarked on giant projects, and ones that haven't gone well. Like, what have you taken away from the learnings of the ones that maybe haven't gone well?
I think it's a good point. Like, it's not only about the internal de-risking on the asset that we have and the project that we're looking at building. We've got free learnings across the sector when we look at projects that have done well or projects that haven't done well. And so we would be very naive or foolish not to take note of what's happening with companies that are building projects in similar environments around us. And so we run a pretty extensive kind of case study and benchmarking exercise as we're putting our studies together, and say, okay, we feel like we've sufficiently de-risked our project, but also let's take a look at, what's happened elsewhere on other projects and try and see what those lessons learned were and implement critical controls to mitigate challenges that, maybe another company encountered on a different project, and say, we might not be, we might not be insulated from that. We might have the same type of risks. And so how can we mitigate and weather that storm better? So it is a combination of doing our homework on our own asset, understanding the environment that we're in, and then taking free lessons learned from what our peers are doing. And then you put all of that together, and eventually, once you feel like you've satisfied enough requirements, the stage gates have been reached, milestones have been hit, checklist has been complete, then eventually you just got to say, okay, we're going for it, and you kind of hit sanction.
If we sort of go into a couple of the details of Vicuña as well, obviously it's in Argentina, a country with a fascinating economic history, and in a bit of a sort of upcycle now. And you guys posted a selfie not too long ago with Milei, so I've got to ask, what is he kind of like, and how do you kind of get comfortable knowing this project is going to, outlast his administration by many multiples? You're putting a huge investment in the ground there in Argentina.
Well, I think it was, for us, it was amazing that we were able to meet with President Milei in January 2024. Less than a month after he had been brought into office. And at that time, we were, presenting what Josemaria in Lundin mining looks like and what it could mean for San Juan and for Argentina. We talked about the broader group and our history in Argentina. And I think, the approach that we wanted to communicate about, focusing on building capacity in Argentina, being there to support the development of an industry that, could be such a contributor to the economy of Argentina. I think you're pushing on an open door when we're having that kind of discussion. So he definitely was, it was a meeting that you'll never forget. It was amazing that he was, willing to welcome us into the Casa Rosada, into his office. And, now if we fast forward to where we are today from when we met in January 2024, we've significantly advanced Josemaria. We've, drilled out significantly Filo del Sol, still open in basically all directions, a monster deposit. We've consolidated both Jose and Filo into Vicuña Corp and, brought in our partner BHP to look at building this district out in a sequenced way, but also as efficiently as possible, getting to full scale. So, now we're in a position where there's still a lot to be done, but we've achieved a lot since January 2024. And I think, I'm hopeful that we'll get to meet with him again and share kind of all of the progress that we've made and gain even further alignment that, now we've done our homework, we've got our partner, we've got kind of conceptually how this project needs to be developed. And we look forward to bringing it into the next phase.
You guys are up for the challenge, right? This is just a reflection, reading about the both of you. I mean, trying to build a formidable copper producer of this scale in this part of the world takes cojones. But I don't know what's harder, doing this or climbing Everest, Jack.
I mean, listen.
This is probably more sustained hardness. Everest was 5 weeks on the mountain.
Yeah. No, I mean, both bring challenges and risks, and I think the lesson learned on doing Everest was, similar to how we approach our business. Like, we're taking on risks, but you can mitigate those risks substantially if you have the right team, the right approach, and the right mentality going into it. So, I'm excited that we're embarking on this journey, and we're going to be, hopefully getting into development phase pretty soon here. It's been a long time coming, just, being a kid and seeing our dad travel down to South America for so many years, such long trips, and then us coming into the picture and looking at bringing it to the next phase. It's obviously something pretty special. But yeah, I mean, just like Everest, you look at kind of where the challenges are, where the risks lie, and see if you can mitigate them. But at the same time, it is about, taking that step and just moving forward on it. So, we like to do some crazy adventures sometimes. We also like, following sports quite a bit. And I think there's a lot of synergies to apply to how you run a mining company or a resource company compared to how you look at a basketball, hockey, or soccer team kind of, looking to win a championship. And so we try and kind of relate everything that we do outside of work to work. And it also makes it fun.
I couldn't agree more, Jack. I'm curious to hear how you guys thinking with regards to financing the whole Vicuña district has perhaps changed on the margins in the recent year. When we sort of take a snapshot view midway through 24, the group of companies is, call it 25 billion. I think Lundin would be 11 or 12 billion in market valuation, and it's more than doubled in the past year. And obviously that has a big impact on the equity side of your cost of capital. So how does that sort of thinking change, bearing in mind that you don't make FID in the very near term anyway?
Yeah, so I mean, we have so many options on the table for how we can finance our portion of the Vicuña build. I mean, over the last 24 months, really, it hasn't just been Vicuña and creating Vicuña Corp and doing the transaction with BHP to buy Filo, but we've embarked on a number of transformational deals where we bought into Caserones in 2023. Well, it started with us buying into the district through the acquisition of Josemaria in 2022. And then on the Chilean side of the Vicuña district, we bought 51% of Caserones. We had a call option to go up to 70%, which we exercised last year. And then we announced in July the Vicuña Corp transaction of last year. And then in December, kind of the final piece to restructuring our portfolio was selling our European assets, one mine, a zinc mine in Sweden, and copper zinc mine in Portugal to Boliden for around 1.4 billion US, with potential contingent payments coming to us up to 1.5 billion. And that put us in a position to pay off the debt that we took on for the other acquisitions that I spoke about. So now we're going to exit this year essentially net debt free, probably, potentially in a cash positive position. And that gives us the optionality for, a number of ways of financing the Vicuña project. So we've got a corporate debt facility, 1.75 billion revolving credit facility. We are going to be looking to upsize that significantly. And that's ongoing right now. We've got, other levers that we can pull on. And I think what's going to be super important for us is that when we come out with the integrated technical report in Q1 of next year to really showcase the full scale of what Vicuña is going to be, but more definition around kind of phase one. In parallel to that, we should be ready to talk about how we will fund our 50% share. So it's not like we're presenting a big project, a big CapEx with no idea of how we're going to fund it. I think we put those, that communication together, and we'll show the market that even this is a greenfield mega project, largest discovery in the last 30 years in the copper sector, and going to be one of the biggest development projects across the resource sector. 50% of that owned by Lundin Mining. A company of our size can comfortably finance that, and we don't have to really bet the farm on it. I think we've got a strong portfolio of 4 operating mines that the cash flows generated will also help our ability to raise funding.
That plan to come out with the study and the plan on how to fund it. Like correct me if I'm wrong in misinterpreting or mischaracterizing this, but does that decision, is that born out of like a key learning from the way the Josemaria acquisition was received by the market?
I think like you just kind of evolved and like how well the team's doing at Lundin Mining and putting itself in a position where like you can lend against the operations, and you have that balance sheet like freed up, ending the year potentially in a net cash position. And then, you don't want to completely over lever the company, but you're doing strong free cash flow that will support a big credit facility. And like looking to do this, potentially off the balance sheet of Lundin Mining, but also staying disciplined and continue with our shareholder distribution policy. Have the ability to pay a dividend and buy shares back while you're going through this transformational production profile change. I think it just, the team has put Lundin Mining in such a strong position.
I think what we also do now is, we've got essentially a new management team at Lundin Mining, and we really added depth into our financial planning and modeling team. So we consolidate all of our financials into one model. We look at different capital allocation strategies. We flex the model with various price sensitivities on commodities that we're selling, inflation rates and whatnot. And we want to ensure that all of our growth we can pursue at the same time as having that shareholder return framework intact. And then we layer in, different strategies on how we can finance our, really Vicuña, but there's other growth opportunities that we're pursuing, lower capital intensity, brownfield opportunities. And of course we listen to the market and are receptive to feedback, and that also goes into how we generate our decisions. But ultimately, we just need to make sure that everything we're doing is well thought through. And I think what we've done in the last 24 months is we have really retooled Lundin Mining to be a simple story. And, we've got huge growth opportunities, but we've also got a portfolio of operations that are performing very well quarter after quarter. And that's what we anchor back to. Vicuña doesn't happen if we don't perform at our existing operations base. And so really putting those, that planning cycle into place and executing on what we say we're going to do, that in turn has, I think, helped with the valuation of our business and giving confidence to the market that, we're taking calculated risks here. We're not being reckless.
There's JD's touched on the pretty bold call and the way Argentina sort of riding the business tailwinds that are present there that haven't always been. The bold call with Ecuador, like you've touched on, and we'll go into further. I want to ask about the DRC and particularly the fact that once upon a time Lundin Mining owned 24.75% interest in Tenke Fungarume and ultimately sold that interest after Freeport sold its interest instead of exercising the right. Would Lundin Mining make the exact same decision on that asset at that point in like if the same situation were repeated today and ceteris paribus, same conditions?
I think like we missed Tenke. That was such a phenomenal deposit. Like our older brother Harry worked for Freeport and was on the project as well. Like you hadn't even got to Fungarume yet, and you're just after phase 2 on Tenke. Obviously, with our partners and Freeport as the operator at the time making the decision to sell. If we could have bought their interest and consolidated, I think that would have been phenomenal, but that opportunity didn't present itself. So exercising in the tag along rights. But I think, again, it just goes for if there's a tremendous world-class deposit like that and a host nation that wants to partner and see it get developed, we won't shy away. But at the same time, it's really it's probably harder to find a good team than a good project. So you just got to make sure you have the bench strength before taking on too much. But no, we wouldn't shy away. But I think Lundin Mining story is so clean right now, and you have that growth lever that we want to pull on. If something like that presented itself and we took a serious look, it'd probably be outside of Lundin Mining.
When you guys kind of think about the jurisdictions out there that really excite you, what kind of comes to mind? You've often had a pipeline of new vehicles that are exploring in other kind of corners of the world, be it Sudan, be it the DRC, or West Africa as well with Montage of late. Where are the kind of pockets around the world that make your eyes kind of light up?
It's just those host nations that they have that doability. You can go out and they want to see it happen, and you can get projects done. It's definitely not in the cards at the time to do Montage and have another vehicle. But again, when Martino and Petter and Sylvia want to go and embark on this adventure, and we were fortunate enough to have shares in Montage, and then obviously got a lot bigger. But Cote d'Ivoire wanting to see this mine get built, you just get very excited. You have a team who wants to do it, you have the project, and you have the host nation who wants to do it. So when the stars align, it's almost impossible to say no.
And of course, Zijin involved there as well. I mean, what do you kind of learn from the Chinese, the way they've kind of revolutionized mining in the last sort of 10 odd years, and their different approach, which isn't always applicable to Western companies and workable, but there's certainly a lot of value unlocks that they've brought to the industry. What do you kind of take from them?
I think it's just understanding these resources, are finite, and it's tough. I just, you're on the circuit and you go to conferences and you bump into each other, and so you're able to form a bit of a relationship, and then losing out a lot of the time, making a bid on Timok, getting blown out of the water, looking at Kinsanfu in the DRC getting blown out of the water. We think we have the ability to move quickly and make quick decisions and be able to bring projects online, but they kind of have almost a different pace. And so We thought, they came in as a 9-9 on Montage, and was impressed with their DD work and impressed with the relationship. So no, it's interesting to see, and like they really came out of nowhere in the last decade.
Similar to you guys, they make long-term decisions as well. The capital they deploy, it's patient. It thinks about these resources through the up cycles. You mentioned the stuff outside of Lundin mining, and maybe very proximate to that is, of course, NGEx, and the recent kind of value creation decision there was to spin out LunR Royalties recently. As an observer, kind of just like trying to make sense of that from the outside, like wicked to see for NGEx shareholders, but also I can't help but wonder if maybe the decision to do that at that point in time is because it's like the only time you can spin out the royalty. If there's a consolidation with NGEx and Vicuña Argentina down the track, it might be too tricky to do then. Is that a fair characterization?
Yeah, I think it was like we looked at it on other companies before, and it's just, again, like it has to kind of line up. And so like there was, without a resource outstanding on Lunahuasi, and the cost of the company to spin out a royalty wasn't wild, and so we went with the decision, let's do it now, and create another vehicle to see if we can grow that royalty business. I think it's an interesting space, and it's they trade on great multiples, and no, it'd just be interesting to dive into it. But it wasn't done like, okay, we can get this done, and then now let's sell NGEx.
Yeah.
Like, I think if you get taken out along the way, like that could be a positive outcome. If you're going to get paid for something in advance and it's good for shareholders, you have to entertain it. But very excited about NGEx and Lunahuasi and Los Alados, and with the mindset, like every company we have, we say, okay, like we're prepared to take it all the way. And so looking at Lunahuasi and seeing it, Argentina, you're in this great environment. It looks like a very special deposit. I don't think it'll be big tonnage. So it should be a meaningful CapEx. And then, okay, how are you going to fund that CapEx? NGEx has a lot of cash on the balance sheet now, but down the road, they're going to retain a 20% stake in LunR. And then if you need to monetize that to help fund CapEx, we thought that was also a good way.
I also would add that I think seeing the value that can be created through having these royalty companies, I mean, it's the natural evolution of the group. We're always looking at being innovative and how to create value, and looking at different options that are on the table, and taking on new opportunities. We're always trying to incubate good ideas, and if they make it to the surface, then like let's pursue it. And so I think this LunR Royalties is going to be another seriously strong value generating vehicle, with a great team going to be in place. Adam coming out of retirement to take over as CEO, because I guess he was getting bored, doesn't have enough to do. It's I think it's just going to be another great vehicle for us to create value with the shareholders that are along for the journey.
How are you going to grow it, Adam?
Well, it's kind of put like we're going to try and grow, like obviously super competitive space, got to start like getting comfortable with, 15, 20 year payback is a good deal. But I'll see, like, I think if we can maybe stick more precious metal weighted at the beginning, like if it's copper, gold, see if we can find a producing royalty. I think it's going to be challenging, but I think just getting a producing royalty in there will help re-rate the Los Alados and Lunahuasi royalty. But definitely trying, like, with this company being born with such phenomenal assets, you want to kind of maintain that quality as well. So I don't put myself like too much in a box and make it a very challenging to grow, but it's definitely going to, let's see what we can do.
What did your friends at BHP have to say when the royalty got spun out? Did they share any thoughts?
Like, it's a great relationship there. So like mentioned it, and they were excited to see, where it's going to trade, because having 50% of Vicuña, and okay, like Lunahuasi or Los Helados aren't into Vicuña JV, but they're in the neighborhood, and you can kind of see a read through of what Vicuña's value can be potentially.
JD, it's striking to me how the Lundins have this phenomenal capability of supporting the group of companies. They can write big checks. They can, be there when other shareholders might be more short-term focused. These guys are long-term focused. And that sort of support, it reminds me of some of the most important support in our entire industry, which is
Sandvik ground support.
Sandvik ground support.
One and the same. These companies, they don't get from A to B without the Lundin support, just like underground mines all around the world don't get the product out the ground without the support of Sandvik ground support, mate.
Support of Sandvik ground support. You know the biggest supporter of Sandvik ground support that I've ever met?
Derek Hurd?
Derek Hurd,
the man, the myth, mate. And he has been pumping out the innovations lately. Of course, with the R&D team there, you can check out the latest new large PCD drill bit. That one's specifically for coal mines, but they are creating new inventions for every single commodity, every type of mine, be it a cable, bolt, mesh, different types of grout and chemicals that they're working on, even the digital systems, mate. The digital systems to monitor that your underground environment stays safe day and night. You can get that at Sandvik.
Mate, when you're underground and you look up and you think, oh yeah, look at those bolts, keeping me safe. Sandvik ground support.
Sandvik ground support. And if we hadn't sold you enough yet, mate, download the app. Get on the ground support app, put in your order. Derek Hurd will hand deliver it to your site in Australia.
Good on you, Derek. Go Sandvik ground support back to the Lundins. Let's speaking of things that trade on a multiple that is amazing. Lundin Gold, the value creation there is exceptional. The cash flow that Fruta del Norte is generating phenomenal, and Jack, I know you worked there. You saw this project go into construction, into development. How do you get comfortable with the lack of diversification that company has? It's a single asset company with a staggering valuation and solely concentrated in Ecuador. Are you just completely comfortable with the regime in Ecuador that you don't need diversification?
What I would say is that, focusing on maximizing the potential of FDN has been the best business decision for Lundin Gold. And we've redeployed capital into the ground around FDN and come up with now 3 new copper porphyry discoveries. So it shows that FDN is surrounded by such unique mineralization that we are now validating this as a district, much like Vicuña. And throughout that period, we have also looked at, just like with every company in the Lundin Group, opportunities to grow through M&A or through diversifying the portfolio. But we can be, we don't have to be hasty on something like that. And so the exploration team that is in place there with our VP of Exploration, Andre Olivier, he's really done a remarkable job trying to, look at this region through a different lens and piggyback off of all the great geology work that had been done in the past. But you combine world-class deposit operating really with a level of excellence that, makes it a top rank mine in the world, not just in gold, but I think across all commodities. And then you put that beside an emerging district that has precious metals and base metals, epithermal deposits, and porphyries. And I think it's been a good decision for us to focus our concentration there. What gives us comfort at Lundin Gold is the fact that we put so much effort into developing a really good relationship with the communities in the area of influence and getting that social license and buy-in and bringing, the philosophy of building capacity, not just for future employees, but also for suppliers and for opportunities to diversify the economy in the surrounding area. It's been a really good model. Now, if opportunities do come up to acquire assets outside of Ecuador, and make us a international, global gold company, then we'll pursue that. But I think the decision to really focus on what we have in that area of influence has proven very, very well, and it's enabled us as well to put a very sound shareholder return framework in place. At a minimum, paying 50% of our free cash flow after the $300 million US per annum dividend that we pay as a base dividend. Our free cash flow yield is solid, and our returns as a percentage of free cash flow is industry leading. And I think that's also helped the share price get to where it is today. A remarkable run that I think none of us really foresaw happening.
What are the sort of countries that jump out of you? You think America's kind of focused there, given the vehicle? I mean, the whole environment of resources has kind of been spun on its head in recent times, and it looks like we're continuing down that trend. And on the back of that, gold has performed very strongly. But how do you go out picking those jurisdictions that you're going to put yourself in for the next kind of 50 years?
Well, I think it's not that complex of a model that we have at the group. Like, if there's a deposit out there that has very attractive attributes, that's the first incentive to go in and look at it. We don't really have restrictions on where we want to go, but the first thing is there a deposit worth going to pursue? Then if there is, you go in and you immediately look at the deposit, the area of influence. You look at, is there opportunities to actually build or operate something here? Are we wanted? Can we form a partnership? Then going to the central government and trying to have that discussion and say, this is our approach. Are you supportive of us looking at making an investment? And if you've got the economic, geologic conditions, the area of influence, has opportunities and wants you to be there, and the central government is supportive of it, then we would move in and make that investment decision and really try to add value that way. So we don't necessarily discriminate where we go. It just has to have those kind of three criteria being satisfied.
But for like a Lundin Gold, it's not like you wouldn't see them then go pick up an asset in Cote d'Ivoire where like Montage is active. You'd see definitely like Lundin Gold probably stay in the Americas if they were looking at an acquisition.
Yeah, I think it makes more logical sense to stick in the Americas, but
We're trying to allow the team to be fresh a bit too.
Yeah, and now we've got Jamie Beck, just like not even a week into the role. I think he's extremely excited about this time looking at proving out a district, whereas in Vicuña with Filo, you're proving out a district, but you didn't have any cash flow. Now he's got a district and a literal gold mine to support that. And he's also very creative with, potential business development opportunities. So let's see what they come up with, and we'll be supportive if it makes sense.
I know you guys think long term, and if you just like fast forward 40 years, and it's your own kids running Lundin Group and the group of important companies. At that point in time, what does Lundin Group look like? What business have you left them?
I mean,
how long from now?
I said 40 years, but
No, I think it's just like the way the business was, left, like when Dad passed away, like there's a Fruta del Norte, there's like tremendous, deposits within it. And it's like, yeah, okay, it's going to be tough work, but it's also like just the people that like our grandpa and dad, had in place at the group and surrounded with, like, as long as it was a good asset base. And again, just being able to work with just some really world-class individuals, I think it'd be more important than leaving to them, like, just the all-star cast we have today and see that similar. Like, it's all about the talent you have, and that makes everything possible.
there's certain companies in our industry that have pretty deliberately stayed small and not a stable of companies like you, but they've been very particular about trimming assets in the good times, picking them up when they're cheap. Does part of that kind of resonate with your thinking? I know it's a bit of a different kind of model, but optimal shareholder returns are not always kind of driven when you're a 200 billion plus company, you know. Often being small is more conducive to that. How do you think about that?
Well, I think what has worked for us is making sure that we have separate companies to run their own mandates with a board and management team and workforce that is completely aligned on driving value for that respective company and what that strategy is. If we tried to put everything into one vehicle, it would just, you would be struggling on how to appropriately allocate capital. And so always looking to stay entrepreneurial to ensure that we are, even as we grow with some of our companies, and hopefully all of our companies, we continue to grow, but eliminating bureaucracy all the time, always looking to improve on how we operate and make things efficient and effective. Running a company like Lundin Mining, we approach every day and we ask questions every day about what is this process? Is it needed? If not, delete it. We can build it back when it's needed. So making sure we're always staying fit for purpose is critical, because it's very easy for things to kind of get away from you, and all of a sudden you've got all of these processes, and before you know it, the processes are governing the people in the company, not the other way around. So, we want to grow Lundin Mining to become a top 10 copper producer, and that's going to make, the market cap go extremely high. But I think we can still maintain that culture, even if we are 5-10 times larger than we are today. So it's just about managing kind of the processes and the bureaucracy the same way that we manage our safety protocols. If you have a good month of safety, you don't just take the next month off. Every day you're at it, making sure what are the critical controls that need to be in place? How are we mitigating it? What are our risks? How are we mitigating those? It's a relentless effort to ensure that you keep that kind of culture intact.
Costs have a propensity to grow without the discipline to cut them out from time to time. It's refreshing to hear that perspective. We were on the phone last week with a US-based kind of capital allocator, and he was talking about the types of companies that he invests in and the ones that he doesn't. And he mentioned this thing called the Lundin Put, which is tremendously useful. And I'd never heard of this before, but what he was referring to was the dynamic where there's either an unspoken or a spoken kind of understanding in the North American market that the Lundins don't do a down round. Can you confirm the presence of the Lundin Put? Is this a thing, or is this just something that fund managers have birthed into the existence via their own mind?
You definitely never want to do a down round, but I guess I had that pleasure. Like with Filo starting, I think the first equity raise I did was around $2, and then one was like $1.85, and it's tough. Like you're pushing, you're working so hard, the team's working hard, you're having results, but if you don't have the commodities, if they're pushing against you and you have that negative headwind, it's sometimes hard to generate that type of value. So I guess like thinking as a shareholder, and no, I don't think there's not a Lundin Put, but I don't hopefully never have to do down round.
Fingers crossed for you guys. I've got one last quick one, and it's a bit different, not totally specific to the Lundin Mining group of companies, but Canada versus Australia. I think we can safely say in terms of mining finance is on top right now, or maybe that's a bit of a home bias coming in, but do you think it's a sort of lower ebb for Canada and the nation and its capital markets will come back strongly for mining in due course, or how do you kind of think about that?
Like, again, super refreshing marketing in Australia. I think the knowledge level of the investor base is very high. I think the amount of money being invested in this space is impressive, and not really shying away from that. So I definitely see like Australia continuing to grow. I think Canada has that ability as well. But I mean, you just have to help make it a bit attractive. I think the way like the superannuation funds are set up down here and supporting the listed miners here is something amazing to see. Like we don't have that similar setup in Canada. And I think down here, like that started, 40 years ago, and it's just been tremendous. So I don't think that's like a long period of time, but I mean, I'd welcome it.
I don't think 40 years is a long period of time. I kind of like that. Yeah, and look forward to seeing the ASX listing of Lundin Mining in due course down here. Trav, you got anything to add, mate?
Just thanks so much. Congrats on the tremendous success that you guys continue to grow and build. And we're stoked to be able to bring your views and the way you think about the sector to our audience. Thanks so much, Jack and Adam.
Yeah, no, thanks guys. We appreciate it a lot, and like nice to have a conversation with people, passionate about the space. And good luck to you guys too as well. Thanks a lot.
Appreciate it, guys.
Yeah, and hopefully we can do this one next time in person. That'd be great to do.
We'd love that.
Would love that. Absolutely. Thanks, guys. I was frothing. If you couldn't tell, JD, you could tell, couldn't you?
I could tell, mate.
Yeah,
I was very excited to share that, and I was very excited to speak with them, to learn from them, and I hope the Money Miners got as much out of that one as we did, mate. All made possible thanks to our fantastic partners, Sandvik Ground Support, who we featured in the show there, Intralinks as well. Check them out. And last but not least, Focus, the platform by Market Tech.
Get around it. Money Miners, hoodaroo.
Hoodaroo!
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.